In the world of banking, a storm is brewing, casting dark shadows over an already turbulent landscape. Banks, already grappling with soaring interest rates, dwindling profits, and escalating deposit rates, have been dealt another formidable blow: bond rating downgrades. These institutions, crucial pillars of our financial system, have long relied on issuing bonds to fuel their operations. But now, an unsettling symphony of pressures is orchestrating a potentially disastrous crescendo for financial establishments across the nation. As Moody's Investors Service lowers its rating for mid-sized banks and Fitch Ratings ominously contemplates industry-wide downgrades, the domino effect threatens to topple even the mightiest players. The consequences ripple through the financial fabric, triggering a distressing question: are we standing on the precipice of a banking crisis, one that could reshape the very foundations of our economy? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. The turbulence sweeping through the banking sector has intensified as financial institutions grapple with a series of challenges that threaten their stability and profitability. A spotlight now shines on the precarious state of bond ratings, a critical lifeline for banks' operational funding. Recent developments, marked by downgrades and warnings from prominent ratings agencies, raise a stark alarm about the mounting difficulties faced by these financial giants. Moody's Investors Service set the tone, delivering a blow with downgrades to 10 mid-sized banks while hinting at a potential review of 6 additional lenders. A cloud of uncertainty darkened the horizon as they assigned a negative outlook to 11 others, painting a foreboding picture of the industry's health. A subsequent revelation from a Fitch Ratings analyst further stirred the tempest, suggesting the industry could experience a collective downgrade from AA to a plus. Such a sweeping alteration would plunge the industry's credit rating below even the likes of banking behemoths like JP Chase and Bank of America, potentially sparking a chain reaction that trickles down to smaller competitors. This seismic shift in ratings has immediate repercussions. Investors, now facing increased risk, demand higher returns to hold bonds from banks with diminished ratings. This grim calculus drives up borrowing costs for these institutions, exacerbating the squeeze on their profits. The implications are far-reaching, as the tendrils of this crisis extend beyond the borders of the banking sector, reaching into the pockets of ordinary citizens and investors alike. However, the challenges don't stop there. Regulatory authorities are throwing their weight behind a campaign for stability, pushing banks to bolster their resilience through the issuance of long-term debt. The Federal Deposit Insurance Corps, the Federal Reserve, and the Office of the Comptroller of the Currency are jointly crafting a proposal that would compel banks with assets surpassing $100 billion to augment their long-term debt portfolios. This measure aims to provide a buffer in times of crisis, a lifeline that could prevent panic depositors from triggering a domino effect of bank run. While this proposal intends to fortify the system, voices of concern have arisen. The Bank Policy Institute, a prominent trade group, raises questions about the viability of this approach amid an already challenging landscape. Worries persist about flooding the market with a surplus of bank debt, potentially overwhelming demand and thereby worsening the situation. As the tug-of-war between stability and sustainability unfolds, the banking world finds itself at a crossroads, with profound implications for the economic tapestry of our society. In this delicate balance between financial stability and the pressures of a shifting landscape, where do you stand? As the banking sector navigates treacherous waters, the choices made today could resonate for generations. How do you envision the future of banking and its role in our world, And what trade-offs are you willing to accept to ensure a resilient and thriving financial system? Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.